Hello and welcome to another video by reitspro.com. And reitspro is the first and the only dedicated channel for REIT and InvIT investing in India. We give you insights on REIT and InvIT investing in India, and do also visit our website reitspro.com to get a lot of resources on REITs and InvITs and learn a lot more about REITs and InvITs. Before I go on, there is a small REIT recap here. You can pause here and see what REITs are all about if you're unfamiliar, and also do connect with us on our website or through WhatsApp and Telegram. Topic is the exit of Blackstone from Embassy REIT. What Blackstone is about, why did Blackstone exit Embassy, and what are the repercussions for an investor. So the exit of Blackstone happened somewhere around 1920 December, where Blackstone sold 833 million block of deal. Details are there on the news widely. So what has happened is the foreign sponsors, which constituted about 23.5%, 24% as given on the screen here, in mid 2023, which is basically Blackstone, in December now they have 0% holdings. Now, what is the importance of Blackstone for commercial real estate in India? That is what is to be seen. Blackstone entered in India in 2007. And in fact, if you look at what Blackstone is about, there is a Blackstone Global, and then there is Blackstone India. Now, Blackstone Global has a $1 trillion AUM. Then there is Blackstone India, which entered India in 2007, and the real estate sector specifically, and more so in 2011. And the overall portfolio in India is about $50 billion. And the real estate portfolio in India is about $20 billion. History, they started buying office assets only in 2011, and they aggressively collaborated with a lot of developers to do that. And that was a time when there were not many investors who were actually interested in these kind of assets, but Blackstone took a contrarian bet. Blackstone India has this kind of an involvement in Indian real estate. Now, there are listed REITs, and there is private and unlisted real estate investments. So in the listed REITs, there are 4 listed REITs, out of which 3 have been backed by Blackstone. So Embassy REIT, which it has gradually exited. Then Mindspace, it exited fully in 2022. And then Nexus, where it is still invested. That's the history as far as Blackstone REITs investments is concerned. Now, we are looking at Embassy specifically. So what has happened is that the foreign sponsor holdings, which is mainly Blackstone, has gone down through its various Blackstone through its various arms. Now, the total 55%, which was the amount of holdings in 2019, they went down to 38%, then 32%, then 24%, and 24% goes to zero at the end of this year. Now, why has that happened? Now, there are lots of articles and news in the papers and on the internet where there are reasons like micro problems, like internal problems in the REIT itself are being speculated, or there are macro problems being cited like non-lucrative office market in the future, and overall the global factors that there are internationally, there are factors which are making this happen. With other groups also, with Blackstone also, everybody is having certain problems outside. So that's why people feel that things are turning this way. However, if you look at it very objectively, what I understand is that it's about scouting for better opportunities and giving a certain return to investors, a percentage return. So that's the crux of why this current action has happened. So what probably every investor or every fund needs to do is show the actual return to investors and not just non-realized returns. And then they constantly seek newer pastures, greener pastures. For example, today, Blackstone is looking at lots of logistic investments in the Navi Mumbai area. So they feel that they would be able to get better returns for their investors if they move away from these investments. So if you look at the risk return graph, this is what one has to assess, that where is a REIT investor. So if you look at the risk and return, they would decrease at each stage, starting from land finance to developers, which earns the highest, and then goes down with early investors in under construction stage, investors in completed assets, and investors in leased and rent generating assets, which is what REITs are. So REIT investor in terms of a risk and return profile happens to fall here. In fact, this is not something that would probably suit a investor like Blackstone for a very, very long time. So there is a change in the risk profile of investors where the risk return profile of investor one is replaced with investor two because of a different risk profile. Elaborating further, let's just see what the history of Blackstone as such has been. So let's say Blackstone enters the private market. That was in 2011. Then it makes REIT ready assets. So for REITs to be listed, there are a lot of things to be done, especially leasing them out, REIT ready. And then there is listing of REIT. Then when they start earning actual rentals, which is recurring rentals, which would be about 7 or 8%. And then the actual gains realized when the investor fully exits the REIT. So the first point of capital gains is the point when it divests some stake at the IPO level. And then the second point is when the actual capital gains in terms of exit from the REIT is realized. So this is multiple times. And the total of all these would be the return for a Blackstone. Now, naturally, the longer the time frame, the lower percentage of returns would happen because they would have to be till that point of time satisfied with the 7 to 8% growth, or the fact that unless the unit prices shoot up tremendously. So because of all these reasons, we see that this has happened in the past. So what we see is why it has happened. So this is our understanding that why it has happened. Now, what is the situation today? And we'll also look at some legalities now. And then we'll also see what is the probable strategy that one should have to deal with this kind of a situation that has happened. So if you see the shareholding, again elaborating this, the IPO at the IPO time, this was 55%, and mid 2023, it was 24%, foreign sponsors, Indian sponsors, and others, other than sponsors. These are the graphs. You can pause there and see that the sponsors were at the time of were Blackstone Group and Bangalore-based Embassy Property Developments. And what does the SEBI guideline mandate? Earlier, it was just 3-year lock-in of 15%. Now, there were new guidelines in 2023 where the stake of the sponsors has been proposed to be there for a much larger number of years. And if you see post-exit, now the post-exit thing, the foreign sponsors and Indian sponsors comprised about 32%, 24% plus 8%. At the end of this year, it's going to be 8%, whereas 92% would be with other than sponsors. That would be the kind of holdings that would happen. Now, what happens now to the existing investor? That's a question that everybody would have. What should be the course of company after this? Who has taken the stake? Why have they taken the stake if there are problems? And what are the management changes which would impact the performance? These are the questions that every investor probably would have. Before I go on further, if you like our informative content, do subscribe to us. It gives us a lot of encouragement to keep making these videos for you. Further here, the other shareholdings for Embassy are gradually evolving. Public institutional and public non-institutional portions in this graph here. So at the time of IPO, the total combined of other than sponsors were 30%. Now it has gone up above 90%. Why? Because of a certain evolution in the REIT market. And who are those people who are taking this stake now? Apart from the individuals who have also contributed, the pattern has been like this. The unit holding pattern as on 30th September has been like this. So there have been big players who have taken stake. In fact, these 5 are the 5 top holding of people other than sponsors. So if you see the pretty big names here, and the existing and new investors, including the ones which are mentioned here, which is ICICI, HDFC, and SBI mutual funds, they participated in the recent acquisition of the 23.5% stake from Blackstone also. So as we see, there is a lot of churning in the whole unit holding pattern for Embassy REIT. Now, there are certain cautions, of course, because we've seen that obviously these are big players that they would have invested after a lot of research themselves. But the caution number one would be what would be the management hereafter. So obviously, Blackstone had certain client relationships. What would that happen? How would that happen? And then the attitude shift for asset maintenance, how would that happen? Because as you see, the manager uh, right now happens to be EOP MSPL, and there is a 51% and 49% stake of Embassy and the Blackstone group also. Caution number two is the global impact. So today, if you see, the occupier base is about 81% international and 19% domestic. So this is the office rental demands in future would definitely be impacted by global demand, although we are looking at a lot of GCCs coming in for the rental space. Now, the third is the mutual fund impact. Now, could excess liquidity in mutual funds be driving this demand? So we all know that SIPs have spiked, and because of the good performance in the market today, there have been record inflows as far as SIPs and mutual fund investments is concerned. And mutual funds do invest up to a certain ceiling limit. So they could be seeing this as a stable source of income and cushion against uncertainty. And this could also be driving the demand. So this could be an analysis as well as a need, because driven by good liquidity in the mutual fund market. So going by all these cautions, one should probably see how the future course of Embassy REIT would be. And if you like the content, please share what your views are on these things that we've just discussed. Do put it in the comment section also. And there is a WhatsApp group. The link is on our website. You can join that and discuss with others as well.